Welcome to my $100,000 stock experiment, Sell Rules, week number 35. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase stocks that I've bought, nor is it an endorsement to purchase stocks in general. You should always keep in mind the market direction whenever you're thinking about trading stocks. Right now, the market is in an uptrend under pressure. I find out this information on investors.com, the IBD newspaper, and the recommendation is that when a market is in uptrend under pressure, that you proceed with caution, that it is okay to purchase stocks, but you want to be very, very selective in your purchases. My basic premise is my start date is April 13, 2018. I have $100,000 to invest. My goal is to double my money in 1 year. My focus is on practicing and developing my sell rules. I follow the CAN-SLIM style investing from William O'Neill. You can find out about that on investors.com, and it's primarily focused on growth stocks. And I'm trading in my rollover Roth IRA. I have free trades and I don't have any tax implications. My basic sell rule is if a stock falls more than 8% below the purchase price, I sell it. That's called my floor. And I set a stop limit order at that point when I purchase a stock. I try and hold stocks that are going sideways for 4 to 6 weeks. I'd like to see my stocks gain a minimum of 0.5% per week. After a stock has gained 10%, I change the floor to a violation of the 20-day exponential moving average. And I don't have any stocks that have gained 10% at this point, so I'm not going to review that example, but it's there. And I also watch stocks that I've sold to look for repurchase opportunities. I have an additional sell rule for when the stock market is in an uptrend under pressure. For stocks that I've held less than 8 weeks, I would raise the floor to a violation of the 20-day exponential moving average or the 50-day simple moving average. And I'm revising that slightly to not a violation of it, but just basically up to the 20-day or 50-day moving averages if it is above that 8% floor. I want to limit my losses at this point in time. Most of the stocks that I purchase are growth stocks and they don't typically offer dividends, but some of the ones that I have purchased have paid small dividends. There are 6 stocks and for a total of $246 in dividends. So I went back and I added that amount into my cash. This is reflected in my available cash that I'm reporting this week, but I'm not going back and changing the figures for previous weeks on the cash balance. Note that in the example down at the bottom for Regions Financial, the dividend was paid several weeks after I sold the stock. So when a company decides that it's going to pay a dividend, it pays it to shareholders as of a certain date called the X date. And since I owned this stock during that X date, even though I sold it 3 weeks later when it paid dividends, it still paid me my dividend. When I originally did my analysis, I had a $155 loss in this stock. But when I consider the dividend payment, that loss comes down to $82. I'm sharing some figures now on my winners versus my losers. And this is based on when I sell the stock. So in June, I sold a total of 6 stocks, and 3 were winners and 3 were losers. So I had a 50% hit rate for my winners and losers. And you can see on this chart that in November, I had 0% winners. I sold 8 stocks and they were all losers. And in December so far, I'm at 33%. The area highlighted in yellow was also super uncomfortable for me. I was buying and selling too many stocks, and you can see in November, nothing worked. I mean, that's a huge red flag. The dollar amount is more important than the actual numbers of winners and losers. This is showing you by month the total dollar value from stocks that I sold that were losers and from stocks that I sold that were winners. And you can easily see my best month was September when I sold Tandem, and I had a gain that month of 36,000, even though I had 4,800 loss. I also wanted to take a look at the highest and lowest values for my losers and my winners. So I'm going to use October as an example there. So in October, of all my stocks that were losers, the smallest loss that I took was $427, which is basically 4% because this is based on $10,000 stock purchase. And then I had a huge loss I took, I think that's in Stitch Fix, 34%, $3,474 in one stock, huge loss. And then my winners of the stocks that I sold in October, the one with the smallest gain was 303 and the stock with the largest gain was 3,440. So I need to make sure that I have figures that look more like July and December than the other months where I did poorly. I did sell 6 stocks in week number 35, and I am going to consider these still sell rule number 1, but I need to change the wording of that sell rule. It had originally said if the stock falls 8% below the purchase price, but really it is if the stock falls below the floor that I've set. So on all of these stocks, I had raised the floor and then had automatic stop limit orders, and they all triggered out. So I took a less than 8% loss on all of these stocks, and 2 of them actually I had a small profit in. I'm going to review the stocks that I've sold now. So this is a chart from last week for VRSK, and I had noted that it was up 5% and it had been a little choppy and was taking a long time to move through that number 1, that pivot area. And I did raise my floor up to that 50-day simple moving average where that dash yellow line is. And if you look at it this week, I did sell it. I had raised my floor and I did sell it. I have a small gain of $126. The same sort of thing happened with Omnicell. This is my chart from last week where it had been up 9% and it was easily above that 5-day simple moving average, the gold line there, and it fell apart. You can see it fell below its 5-day, its 10-day, and down to the 20-day exponential moving average, which is where I had raised my floor up to. That yellow line, solid yellow line, it was my 8% floor, but I had moved it up, so I actually sold it where that dash red line was, and I took a gain of a little over 2% in the stock. I also sold Arbor Realty Trust for a loss of $420. I had moved that floor up to that 5-day, or sorry, the 50-day simple moving average, that diagonal red line there. And Ulta, I sold for a loss of $565. And you can see that number 1 there, that after earnings came out on Thursday, I think it was, that stock just tanked. So I sold up where that dash red line was, and I'm glad I'm not down where the number 1 is. Yeti also fell below my floor, and I took a $577 loss on that stock. And the last stock that I sold was Helen of Troy, and I sold that right around the same point that I purchased it, and I took a loss of $16. I did not make any purchases week 35. I'm still holding 5 stocks, and on the left-hand side, I show the current holdings in the dollar value of the stock. And remember, I purchased approximately $10,000, so the ones that are in green are up, and the ones that are in pink are down. And it shows the value of each stock at the end of each week. And I sort by the losers on top, thinking if I take care of my losers, that the winners will take care of themselves. So the percentage change is more important to me than the dollar value. So over on the right hand side, I sorted with the losers on top, and you can see GBCI has lost 5.7% in 1 week. And I highlighted the 3 stocks there um, that are showing me most concern. CDXS, even though it's the second biggest loser, it had had a big gain the week before, and its chart is still looking nice. So I'm not as concerned about that as I am the 3 that are highlighted there. And last week I was worried about Yeti, Ulta, ABR, which I all got rid of those. They all got sold. And CCEP, I was worried about it last week, and I'm more worried about it now. Now I'm going to review my current holdings in the order of which I think is weakest to strongest. So this is CCEP, and it is down 2.4% since I purchased it 18 days ago. And I have raised my floor. I did have the solid yellow line at 8% below my purchase price, and I've raised that up to 46.56. And you can see the dash green line is where I purchased the stock, where that little box is. I'm trying to show that between this number 1 and this number 2 and that dash purple line or dotted purple line, that this stock had high points that were equal at the number 1 and the number 2, and then the stock had fallen below, gone all the way down below its 50-day moving average, and then it came back up. So once it hits that price at number 2 and crosses that dash purple line, that's considered when the stock is breaking out. And if the stock falls back below that, I'm going to consider this breakout failed. Glacier Bancorp is also near its floor, and I'm hoping that it pops back above its 20-day exponential moving average, but right now it is below it. The solid yellow line was the original floor, but I did move this floor up to a point where I don't think the stock should drop below, and it's just slightly, that floor is slightly below the 50-day moving average. Starbucks is also having a hard time moving up. It's basically going sideways, and I have my floor set right around my purchase price. It's actually about 10 cents from where the stock closed on Friday, so I expect to get stopped out of the stock this week. CDXS. Last week it was living above its 5-day moving average, but now it has crossed below it. And I'm going to go ahead and raise my floor to what I consider the previous high before it had its breakout, where that dash yellow line is, and that number 1, you can see there's a red price action bar, and the high that day was 1960. So that's where I'm going to put my floor. If this stock drops below that, I'm going to consider it a failed breakout, and it will sell. And the stock that's performing the best, in my opinion, is Americold Realty Trust, symbol COLD, C-O-L-D, and it is up 3% in 11 days. My current holding bar chart, each bar represents 1 week, and I have COLD in green there. That's the one that I think is performing the best, and you can see that CCEP has steadily been going down, as has Starbucks. I have stop limits set for all of these stocks, so I'm really not concerned about any of them. They'll either trigger out and I won't own them anymore, or they'll be even or go up. So my benchmark shows that I lost an additional $2,500 in the past week, but I'm still up 16% since I started my experiment in April. The industry breakdown shows that I have a good mix of stocks in various sectors. So I'm not concentrated in any one area, so I like my diversity. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell so you get an alert when I post a new episode.